Morning, everyone. Yes. Good morning, everyone. Good morning. So let's resume from the questions that we completed yesterday. Okay. So I just need to open this relevant files. Give me a moment. Video. Just for low light not required. So friends, we are done with question number 1 and 2. Correct? So let's go ahead with question number 3. First, as usual, we will have a detailed reading of this question. Come on, people. Keep your videos on. I should know whom am I talking to. Talking to blank screen is very difficult. Yeah, I understand in between, sir, we get up for water or something. Fine. For a momentary, you switch off your videos. Sometimes even I have to do that. We understand that. But then all the time keeping videos off, talking to a blank screen, it's a big task. So let's start, guys. Yes, Karina, what happened? Not convinced. SSC talking to screen is a difficult task. Okay, fine. That said, my students are there responding. Then pretty fair exercise. So let's start. Aparna completed all the formats. Okay, Chala, let's go ahead. So we will start with reading question number 3. Okay, so let's proceed further. Let's start reading question number 3. Okay. The following information has been extracted from the records of the company and the product cost sheet, and everything per unit is given to us. Okay. The raw material is 45. Direct labor is 20. Overheads are 40. Fine. Then the total cost and then the profit and the selling price. Okay. See, in this question, we are given the materials are in process on an average for what? 4 weeks. Guys, the first two questions we solved, and it was like this: ignore WIP not given here. It is given. Fine. So see now, as we gradually move ahead in this questions, but obviously we have to cover more and more information. So in case, in this case, what will be saying? Okay, fine, sir. In current assets, we have stock and we have WIP stock, right? How many weeks? 4 weeks. Okay. The degree of completion is how much? 50%. The degree of completion is how much? 15%. Okay, fine. See, we have made an assumption that if question says nothing, if listen to this carefully, if question says nothing, then 150-50. I hope you have understood what I have said. 100% material, 50% wages, 50% overheads. But the question is very clear. Degree of completion is 50%, which means raw material 50%, wages 50%, overheads 50%. Right, friends? Okay. Finished goods stock on an average is how much? 1 month. So stock of finished goods 1 month. Okay. Time lag in payment of wages and overheads is 1.5 week. Okay, so when we will be recording our current liabilities, in that we will have outstanding wages 1.5 weeks, Outstanding overheads 1.5 weeks. Okay. Time lag in receipt of proceeds from debtors is 2 months. So here we have debtors 2 months. Credit allowed by suppliers is 1 month. So in the list of current liabilities, we'll write creditors. Correct? 1 month. Fine. 20% of the output is sold against cash. So that means when we are estimating our debtors, out of the total sales, 80% would be debtors, right? Because that will be the credit sale. Company keeps a cash balance of 1 lakh. As we had discussed yesterday, every time will be given a ready amount, has to be given in the question. So cash 1 lakh. Okay. Take 52 weeks per annum. So that means wherever we have weeks, 1.5 week, 1.5 week, wherever we have weeks, okay, over here also 4 weeks there, what we will divide it by? Divided by 52 weeks. Okay, fine. Company is poised for manufacturing of how many units? 1,44,000 units, which simply means is prepared for. Poised means is prepared for, or it is set. Means what, guys? Next year's target. Poised means what? Prepared or set. So basically, next year we are going to produce how many units? 1,44,000 units. You are required to prepare a statement showing working capital requirement of the company. Okay, fine. So let's start with this data. And once again, guys, method is not mentioned. So if the method is not mentioned, what we do? We follow cash cost method, just like question number 1. And at the end, what we do? We give notes. Correct? Yeah. Yeah. Somebody has put a message that they don't have notes. Let me tell you that you can always download it from the website, or in the timetable, the link is given. You can download those notes, and obviously I have to make those markings in the notes, right? I cannot go on writing it somewhere else. Wherever I'm teaching, there I have to mark. So in case you don't have notes, don't worry, you have a simple option. You get into your timetable, weekly timetable, there will be the link for notes given. You can download the soft copy from there. Okay, so let's get into the solution. Yeah, let's come to question number 3. Okay, yeah. So going to the data, guys. Let me open my questions. The soft copy of the questions. Yes. So as we have discussed, it is how many units? 1,44,000 units. No? So how we would prepare our income statement? Whatever is per unit given, as you can see, we multiplied by the total number of units. So raw material is 45 into 144. Direct labor is 20 into 144. Overheads are what? 40 into 144. Then see, as discussed yesterday, cost of production and cost of goods sold is going to be same. Why? Is it mentioned anywhere that the company is newly commenced? No. So we know our assumption that opening stock is equal to closing stock of finished goods. So COP and COGS both are same. Add to it profit gives you selling price. Okay, fine. You know, see, we have done 2 questions. Yesterday also we had a question like this, where question number 1, where you say, okay, sir, now GP is just going to be equal to NP. Remember, friends? Because it is just same, right? There are no expenses related to P&L account. Also, no, sir, we want to present it. Okay, fine. I have just shown it to you. See, calculation of net profit. Remember in question number 2, solution we had done like this. We had carried this GP down, and subtracted all other expenses. But there are no other expenses. So even if you feel like doing it, there is no scope available, right? Just for the sake of showing it, I'm showing it to people. Okay. Calculation of cash cost of debtors. What we discussed yesterday. We'll take sales, correct? Subtract net profit. Okay, fine. Subtract depreciation. But guys, see, take a note of this over here. There is no depreciation specified. So I have no depreciation to subtract, basically. So the cash cost is arrived at. That's it. Okay. So I'll give you a minute for copying this, then we will continue. Mahesh is done. Bless you, also done. Okay, people, let's start then. Yeah. Okay. Yeah. So as usual, we'll first start with current assets. Right? It in current assets, first we write stock. Now check with the question, guys. We are given stock of WIP and stock of finished goods. Okay, fine. Is stock of raw material given in the question? Is management willing to hold a stock of raw material? No. You have to act as per the directions of and orders of top management. Yesterday I told you, right? You don't dare to disobey them. Okay, jokes apart. This management is of the opinion probably raw materials is going to have a continuous flow. So there is no need to stock. Correct? So fine, management doesn't want us to stock raw material, so we will not consider raw material in the estimation of WIP. Okay, as simple as that. So WIP in the estimation of working capital. So WIP is how many weeks? 4 weeks. So come over here and write WIP. One minute. Okay. Take a look into the question. What it says that WIP is to be valued at 50% of everything. So I think we have a total of 50% of everything. Means I mean to say the total of material, wages, and overheads. We know the total of all these to be 1 crore 51 lakh 20,000. So see, instead of taking 50% of the first one, 50% of the second one, 50% of the Third one, what we will do together to the whole total once for all. I'll apply how much percent? 50%. Okay. So the total is 1 crore 51 lakh 20,000 valued at 50% for 4 weeks. So obviously you have to do into 4 by 52 as well. I can see. 1 crore 51 lakh 20,000 into 50% into 4 divided by 52. 5 lakh 81,000 538.46. No, so ignore that 0.46. 538. Okay. Similarly, stock of finished goods. I'll take you to my question. And you know what we've been doing always, right? We say, okay, this is done. Let's say this is done. Stock of finished goods, 1 month. Okay. So let's come to our solution. Let's write over here 1 month. Okay, people. Stock of finished goods, valued at what? Cost of production. So what is our cost of production oblique cost of goods sold? 1 crore 51 lakh 20,000. Is there any depreciation to be subtracted over there? No, sir. No information of depreciation. Fine. Take the full amount. 1 crore 51 lakh 20,000 into 1 by 12. 12 lakh 60,000. Okay. So this also is done. Now debtors we have to take 2 months, but at how much percent? 80%. Okay, fine. Okay. I think we have already done the calculation over here. That you take sales, then you subtract this, that, everything we are done. Just take the number from there. See here. So final cash cost is 1 crore 51 lakh 20,000. Okay. So 1 crore 51 lakh 20,000. But then into 80% we have to do. Why? Because 20% is cash sales, so credit sales would be only 80%. And whatever you get into 2 by 12, 1 crore 51 lakh 20,000, 80%, whatever I've got into 2 by 12 divided by 6. 20 lakh 16,000. Cash 1 lakh. Okay. So copy that. That's it, friends. That is the total of our current assets. What we call it? We call it gross working capital. $39 lakh 57,538. Are you getting the same total, guys? Yep. Okay. What happens, Samita? Good morning. Mornings. Okay. Less current liabilities. Let's continue. So let's check in current liabilities. We have creditors 1 month. Okay, fine. So Let's write creditors 1 month. You all know that creditors depend upon what? Credit purchases, right? But now no data about purchases is given. So what we do? We take raw material consumed 64 lakh 80,000 into 1 by 12. Calculations are also done. Yep. Creditors are 540. Okay. Then the next thing is outstanding wages 1.5 weeks. So is it okay if we first write wages? Absolutely okay. It is just customary that we write creditors in the beginning. Even if you've already written wages, please don't cancel it. It's okay. We just have to take a total and there is no legal format involved in this. So marking both. Then we will move to the next page. See, total wages are 2880. Okay. Remember to divide by 52, guys. Eight three zero seven 6.9 na? So we'll make it 83077 and 5762 divided by 52. 166154. Okay, so let's take a total of B. Okay, Jay is posting the things. Thank you, Jay. And therefore, our net working capital A minus B. $31,68307. 307. Yes, we. So that means the head of this organization, the finance manager, would approach the bank, right, and would tell them, you see, these are my estimations about current assets and current liabilities. So my gross working capital is 39,57,538. Total of A I'm talking. That if nobody is giving me loan, I'll end up borrowing this much. Nobody is giving me credit, I'll end up borrowing this much. But that I'm getting some credit from these people. So obviously my working capital requirement is 31,68,307. Okay. Anybody raising hand, please put it in the chat box. Done? Yeah. We have written very clearly, it's a cash cost method. and at the end we will give a note. So please write the note. Come on, if you're done, please write the note. I hope those who attend the lecture properly won't ask these doubts that the debtors is not based on sales. Yesterday we had a detailed discussion, guys. Which method we follow? There, how many methods are there? There are two methods, right? Correct. What are those? Total basis and cash cost basis. If question specifies nothing, then what we have done yesterday, we are following which method? Second one, the cash cost one, right? Right. Okay. And then what we do? We give a note. Okay. So please write that. Yes. Yes, everyone, please write the note at the end. In the absence of information, working capital has been estimated on. In the absence of information, working capital has been estimated on cash cost basis. Done? Okay. Just continue further. Alternatively, it can also be estimated on what? Total basis. Janavi, you raising this doubt? Bad. We had a detailed discussion yesterday. You were there yesterday, I remember. Then why such a confusion? Fine. Let's continue. So we'll come to next question. I think this was a very easy question, right? Except for one simple understanding that raw material was missing. So we're okay, fine. The institute, the management doesn't want to estimate for raw materials. We're not taking raw material. That's it. This is the solution for question number 3. Somebody's Wi-Fi got down, so now I have to show the question and the everything again. So fine. This is a solution. In case you need a solution screenshot, take this. You need a question? Yes, that's why I'm going to the question. Okay. So let's get into the question. Yeah. So we will talk about the next question now. Question number 4. Before I zoom it further, in case like people are like, no, so we have to take photograph of question also. So for a second, I'm holding it. Then we will continue. Go ahead. Let's come to question number 4. All of us, huh, guys, all of us. All people paying attention, all people dreaming about something, planning to sleep, whatever. Pay attention to question number 4. Bhargav Limited furnishes you with the following details with a request to calculate. Guys, request is a command. Okay, so don't tell me that, sir, he's requesting. We are not interested. It means you have to calculate. It's just a way of putting it formal. On which basis? Total basis. Janavi, I hope all other everybody is watching this. Which basis? Total basis. Told in the question. So you follow that. Okay. And for the year 11. Okay. Let's find out the points now. So credit. 2 months credit to the domestic customer and 3 months to overseas buyers. Oh, that means Bhargav Limited is selling goods in India also and outside India also. Right, friends? Okay, now fine. We'll do so. So when we will write for current assets, we will have debtors. But in that we will have domestic and export. Guys, D is for domestic. Just a short. Otherwise, it will be all full. I won't be able to write anything about it. D is for domestic. E is for export. Okay. Yeah. So domestic debtors, what is written? We are giving them 2 months credit. Export debtors, we are giving them how much? 3 months credit. Fine, clear with this point? Okay, yeah. Now, suppliers give 1 month credit. So whenever you are writing your current liabilities, in current liabilities, we'll have creditors 1 month. Right? Now, you know what immediately happened? People have that mindset. Okay, now what sir has already written no in current asset, domestic export, domestic export. So people want, sir, why not over here domestic export or domestic export? How can be little more practical? We can be little more practical. Suppose you are Bhargav Limited, I am your supplier. You buy goods from me and you sell. You sell to domestic market, you sell an export market, and you give different credit to different people. What am I saying? See, what am I going to say? See, hello, Bhargav Limited. I am your supplier. Okay, you buy goods from me. You wish to sell in domestic market, sell in domestic market. You wish to sell in export market, I don't mind. Put some gaslight, put some kerosene and burn the goods. I don't mind. Pay me within 1 month. So I'm not offering you any bifurcation like domestic and export. Why should I? That's your lookout whom you sell to whomsoever. I don't care. So don't be of that mindset. Here we got domestic export, so here also we should have it. No, nothing like that. So supplies 1 month. Okay. 1 month time lag, 1 month in respect of all expenses. So here, guys, which expenses is not specified, but all outstanding expenses to have a time lag of 1 month, except there's always exception, right? Exceptions are everywhere. So here also, except who sales promotion expenses, which are payable quarterly in advance. So all other expenses we pay after 1 month, but sales promotion expenses are going to be prepaid. So here in the list of current assets, we will have prepaid sales promotion expenses, and that is quarterly. That means three months. Okay. Some projected figures are given to you. Domestic sales is going to be 180. Export sales is going to be 36. Wages are going to be 42, guys. Hello. Outstanding. All expenses right now. So I think we get one contender, no? Wages would be outstanding for a month. Manufacturing expenses would be outstanding for a month. Administration expenses would be outstanding for a month. So when we're talking about outstanding expenses, no, all these three I will account for over here. Correct? All these three. Right? Prepaid, no. Why prepaid should I account for over here? Prepaid is prepaid, this sales promotions, prepaid expense. So it will go over here. I hope clear. Bifurcation is clear. Okay. Yeah. Hello. Putting those arrows is for explanation. Oh, people. Putting those arrows here and there is for explanation and not to create some crisscross kind of grid where you get yourself choked to death. You can understand now that it's only to make you understand, okay, three expenses are going to be outstanding, one is going to be prepaid. Okay, so let's continue further. Permission granted, no? Continue further, right, sir? Right, ma'am? Yep. I assume that you are permitting me. Raw material stock, 1 month for domestic, 2 months for export. Fine. So in the stock of raw material, again, there is a classification. So in current assets, we'll write stock. Let's stock of raw material. Okay. For domestic, we maintain it for 1 month, and for export, we maintain it for 2 months. Right? Similarly, guys, this is finished goods. Okay. So stock of finished goods. Again, we have a classification. 1 month for domestic 1 month, and 3 months for export. Okay. So export 3 months. Right? Again, one statement. We have like flood of statements. Gross profit to be maintained at 25% on sales. Oh my God, what to do with this, sir? Now we have always our imagination is always at our best, sir. So what to do, guys? You understand? Gross profit is 25% of sales. You understand now? If you sell the commodity for 100 rupees, GP would be gross profit would be 25 rupees. Correct. And then the balance 75 would be what? Cost of goods sold. Correct, people? Okay, good, very good. He's smart. Okay, but then there is some other condition attached to it. What is that other condition, guys? See, overseas buyers would be allowed a special 10% discount. See, we are always like this for export sales, like we want to promote our exports. So what we are doing, whatever we are selling in India for 100, no, the same thing we are selling outside India for 90. 10% discount in export market. Did you understand this condition? What I said just now orally? Discount in the export market is 10%. So in India, if I'm selling the commodity for 100 rupees, outside India, I'll sell it for 90 rupees. So how you got 90 rupees? Please type on your calculator 100 into, Satya is laughing, into 10% minus is equal to, you get 90. Correct? Everybody clear to what I said? Okay, so we are good to go. Pavitra, where are you wandering in your whole house? You're in a roaming mode, Pavitra. Be at one place. Okay. Okay, she kept the phone at one place. Now she has gone for roaming. Fine. Next point. This I'm going to talk when we discuss about current liabilities, and this is about safety margin, which comes at the end. So these 2 points we'll discuss at the end. Okay, friends. So that's it. The question gets over here. I mean, reading of the question gets over here. Otherwise, you say answer question over. So fine. Let's continue. Then let's go to the next question. Nothing like that. Okay, fine. So we'll come to the question. We'll come to the solution now. Some unique things are going to happen in the solution, guys. Let's see. Let's see that. So we'll come to question number 4. Obviously, like okay, you can see now a lot of things we will have to write in question number 4. So I'm keeping a good space in question number 4. Why, you know, now domestic export. So we would need a little more space. So I'm doing that. Okay, now you'll tell me, sir, start with the income statement. Guys, those who are present, those who are alive, pay full attention. Later on, like, sir, very late raw material consume. How did you get it? See, pay attention to the question. Everyone, all boys and girls, pay attention. See, if you think of making an income statement, what is the first thing that you will come to know, guys? Raw material consumed is not given in the question. See in our solution, see in our question, wages are there, manufacturing expenses are there, administration expenses are there, sales promotion expenses are there. Okay, fine. So wages copied, manufacturing expenses copied. Sir, administration expenses not copied. My dear friends, there is something called as trading account. There is something called as P&L account. The last two one, administration and selling promotion expenses. Where do we write? We write in P&L account. Correct now, people. Otherwise, you know, people are like, okay, they are on fire. What did you write? Wages. Well, I write wages. Manufacturing. Then whatever they get in the list, no, they write everything. Please don't do that. So when you are talking about COP or COGS, we have to stop with manufacturing expenses. Is that clear, guys? Okay. So out of these 3 things, material, wages, and overheads, what we know is these 2. We don't know raw material consumed. Raw material consumed is genuinely missing. Okay, fine. So we cannot calculate COP or COGS because one amount is missing. Okay, so how we will do it? See, it's a very simple idea. It is a simple idea, in fact. See, domestic sales and export sales. Right now, agreeable to all of you? Domestic sales and what? Export sales. Okay, fine. What we know is, we know the amount of domestic sales and export sales. See, given in the question, domestic sales is 1,80,000. Got it, no? Export sales is 36,000. So where from you get it? Is there in the question, the box? Okay. We know the GP ratio also 25%. So if the sales is 100, GP would be 25. So COGS would be 75. Guys, can we complete these 2 numbers over here now? Tell me yes or no. Can we complete yes or no? You can complete. We know how to cross multiply. Correct? Yes. So let's go ahead. So 100 is 180. 25 is how much? Oh wow, people have already calculated. Okay, fine. I like that. So this is 45,000. This is 1,35,000. Okay, people. I'm sure you're able to calculate this. Okay. Now, what what happens in case of export market? Here there is 10% discount, guys. Yes or no? So we know that in export market, sir, we know that in export market, this is going to be, hey, yeah, chat box should be kept off, no? Latanya, who's this? You people don't attend the lectures or what? You don't watch the whole series. You chirp in between or what? You sir, right? Essay writing in chat box here. People don't pay attention to what I discuss. And then people are like writing the essays in the chat box. Hello? Guys, I'm very clear with this. How we arrive at cost of goods sold. Opening stock of finished goods plus cost of production minus closing stock of finished goods. Question is silent, then we assume that opening and closing is equal to equal. Sorry, opening and closing are equal. So what does it mean? It means COP and COGS is going to be same. Correct? Yeah. Okay. So here, how much should I write if 10% discount? 90. So now, see guys, understand, I produce the goods in 75 rupees. So this remains same. I reduce the selling price, my profit will get affected. Hello, people, you agree with this? Anybody in the favor of reducing the cost of goods sold? Sure. Na? See, 75 rupees is what is your manufacturing cost. You sell for 100, you make 25 profit. You sell for 90, you make 15 rupees profit. Right? Okay, calculating the amounts. This is 6,000. This is 30,000. Yes, people. Thank you for putting the amounts in chat box. Otherwise, I would not have never able to manage these amounts. Your immense help makes me solve this. That is taunting a lot. Top management impact. Okay, fine. People, what we are looking for, sorry, actually we don't know what you are looking for. We are looking to calculate this COGS. Okay, and then what you know, this way it is going to help us. I take a total of this. Got it? People have already calculated raw material consumed, then why am I going so slow? This is 165. So I'm a slow learner. I'm not as brilliant as you people. So this 165 will come over here. Okay. So then now you can calculate the raw material consumed. So how do you get raw material consumed? Oh my goodness. I did not put the plus sign. This plus this is equal to this. So this missing plus this is equal to this. Now can you calculate the balancing figure? 66,000. Wonderful. Okay. Good going, guys. Done. Happy? Understood this 66,000 discovery? Huh, people? Have you understood this discovery of 66,000? Don't be so happy. Wait. This is not yet over. The moment you start with your income, the moment you start with your working capital estimation, no, you will need a bifurcation of this raw material consumed into how much is domestic and how much is export, because we are keeping a separate stock for domestic and export. So what, before we actually go to the income statement, no guys, what we will do is, yes, we will first bifurcate this 66,000. We see, we understand here. Look here in the diagram. This is what diagram. I have to say whatever I've written. 135 and this 30 became 165. This 165 went over here. What I'm trying to tell you, in this 66,000 also, some part is there over here, and some part is there over here. Right? Part of 66,000 is there in domestic COGS. Part of 66,000 is there in export COGS. So how we will find the bifurcation? Dividing the ratio, man. That is so simple. Okay, so let's do that. Bifurcation of raw material consumed. What people are supposed to answer also. Oh my gosh, very fast. I'm just started writing. Bifurcation of raw material consumed in ratio of COGS. Okay, fine. Domestic is to export. Domestic COGS is 135. Export COGS is 30,000. Right, friends? Okay. I'm very slow, it seems. Zero is gone. 15 twos are 15 nines are. Sir, what if we don't know the table, sir? What to do? Yeah, because this doubt is always there. Sir, what you know, sir, 15 table, and probably you already knew that it will be divisible by 15, sir. What if we don't know? Don't worry, guys. This calculator is at your disposal. So you mean to say we keep on searching which table it falls into? No, 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 no. Take the bigger amount, 135. Okay. I'm taking this big number, 135, and divide it by small number. Small number is how much? 30. Divided by 30. What I got? That's what, sir. You get 4.5, sir. You don't get 9. Array, my dear friends. Here I get 4.5 is to 1. Na? That means, so just multiply it by 2 to make it full numbers. 4.5 into 2 is 9, and 1 into 2 is 2. Super. Okay, so now you can bifurcate, hopefully. Therefore, domestic RMC, raw material consumed, total was how much? 66,000 into 9 by 11. So 54,000. And export raw material consumed, 66,000 into 2 by 11. So how much? 12,000. Yes, I am very sure you must have got these bifurcations now. Okay, so now we are good to go. We are going to solve it. Okay, fine. Let us start. Solution to question number 4, classwork. Estimation of working capital of. See, I think first question where we know the name of the company, where we know the year also. We are filling up everything. Otherwise, like we keep a dash, dash, dash. Fill up everything. Okay. On total basis, as what? As specified in question, guys, as specified in question. So let's start. Okay. Fine. So, guys, you have to tell me. You have the question. Yes. You have the markings done. So is it okay that if I don't keep on shifting from the question and the solution? Sure, na? Okay. Thank you. Thank you. Thank you, guys. Once, suppose, see what even I have done what you people do. See, I'll show you. That's what I was doing. Even I have taken a screenshot of my screen. So now I'll be taking the question from here and solution over there, right? So you want, in case you want to take a screenshot, I'll just show it for a moment. So we'll have the things in common to discuss. Okay. So now we're like, okay, fine, we have the same thing. Yes, I won't take the name of the student here, but you are saying that gross profit is 15%. Ma'am, where did you discover the gross profit is 15%? I am seriously unable to understand. Where is it written over here? Gross profit is 15%. Hello? We give discount in gross profits or we give discount in selling price? It's just a simple understanding, a simple business understanding. You run a shop, you're selling one particular item for 100 rupees. And you tell your customer that I will offer you 10% discount. You're standing as a customer. What price will you expect? 90. If there's a discount, how can you reduce the gross profit by 10%? Hello? You agree now what we are discussing? The discount has to be on selling price. So I told you one simple understanding, guys. It's a basic commercial parlance that is it is called. That you have we have a selling price of 100, discount of 10. So it is sold at how much? 90. Yeah. Gross profit is not 15%. It is the numbers. 90 is this, GP is 15, this is 75. It's not 15%. This is per unit price with our assumption. There is time to start. Huh? Sure, let us start. So, in current assets, first we write stock. We write stock of raw material and domestic. Domestic stock we're keeping for 1 month. And see here itself you'll understand that how that raw material consumed calculation is helpful. Domestic raw material consumption is 54,000 into 1 by 12. So 4,000 divided by 12, 4,500. Karina, calculated Karina. Good. Export stock of raw material is 2 months. So 12,000 into 2 by 12. So this is 2,000. Fine. Then we have stock of finished goods. Domestic it is 1 month. Which method? Total basis, right? So it will be valued at what? COP oblique COGS. Correct? Nothing, no need to subtract any depreciation or something. Correct now? Before I can write anything, people are answering. 135 and 30 is the values that I will consider for calculating the stock of finished goods. So 135 into 1 by 12. 11,250. Export we are giving how many months? Finished goods stock 3 months. This is 30,000 into 3 by 2. So divided by 4. So 7,500. Okay. Stocks are done. Then we have debtors. Again, debtors also domestic and export. Okay. Domestic debtors are 2 months. Export debtors are 3 months. Guys, method, which method? Total basis method. In total basis, we calculate on sales. So what is the domestic sales? Domestic sales is 1,80,000. Please remember, you are following total basis. January, we are following total basis. Now here it will be done on. Now here it will be done on what? It will be done on debtors. I think we all can calculate these numbers. Hello, people. Are you able to calculate, make the calculations? Sure. Okay. Export sales is 36,000 into 3 by 12. So divided by 9,000. Okay, so we are done with debtors also. Then we have to write prepaid sales promotion expenses. Yes, let's write that. Three months, right? Advance, payable advance in a quarter, and the amount is 30,000. That's the annual expenses into 3 by 12. So 144, 7,500. Okay, any other asset left? No. Debtors we are done, prepaid sales we are done, both stocks we are done. Okay, fine. So we are good to go for current liabilities. Before we do that, let's take up a total over here. $71,750. I have calculated, guys, so I'm very sure y'all also will calculate, correct? Less current liabilities. Here we have creditors for a duration of a month, right? Okay, fine. So creditors 1 month on the basis of what? Purchases, but we know purchases. We don't know purchases are total how much. So we assume raw material consumed to be purchases. So 66,000. 66,000 into 1 by 12. $5,500. Right? Then, guys, we know what we have to write next is outstanding expenses. Listen to me. We have to write all three expenses outstanding for a month. Anyways, it's going to get added. So, you know, what am I doing? I'll be taking a total of all the expenses. And then only once I will do 1 by 12. Okay, that's a simple idea. Save over time. So, wages are 42,000. Manufacturing expenses are 57,000. Administration expenses are 60,000. So if you say, no, sir, I'm going to do separate total of all three. Doesn't matter. But you just like, okay, fine. Anyways, for all the three, we have to do only one. 1 by 12. So I take a total 1,59,000 divided by 12. You get 13,250. Somebody says, no, sir, I want to take the final. I want to separately do it. Okay, fine. That doesn't matter. Okay. Yeah, wait a minute, right? Don't come to any conclusions. There are 2 points in the question which I have said, Kisi, I'm going to discuss them at the end. Okay. So focus on point number 6. Everyone, please pay attention. Later on, people don't pay attention, then they lack practical experience and then they get confused. So please understand, pay attention. Special packing credit limit. It is some kind of loan. Credit is what? Loan. Okay. Now tell me, anywhere we go to take a loan, okay, I will have to offer something as a mortgage. I'll have to keep some asset as a security. Everyone out there, you understand what I said? It's very simple thing, guys. That I want some loan. If I want some loan from a bank or any other financial institution, what I have to do? I have to offer some security as a mortgage. Everybody agrees on this? Okay, fine. Now suppose the security that I offer for loan, the asset that I offer for loan is worth say rupees 1 lakh. Okay. Now after giving that security as a mortgage for 1 lakh, will bank give me all 1 lakh rupee loan? Never, sir. They will never do that. Why? See, if on the security of 1 lakh, they give me a loan of 1 lakh, what will happen? I'll have no interest to make, means I will not be interested in making any repayment. I'll just take the money and go out. Because it's as good as my asset is sold. Okay, on that 1 lakh rupees asset, if I get loan of 80,000, if I get loan of 70,000, then I know that if I run away now, it's my loss. So it's a normal thing to happen. Whatever you mortgage, no, you always get a lower value of that. And what you have to mortgage, I repeat my point. What you have to mortgage? You will mortgage asset or a liability? Asset, obviously, sir. How can we mortgage a liability? We take loan from one bank and offer it as a security to the another bank. Okay, on this loan, you give me another loan. Wonderful. That doesn't happen, right? So we have learned in economics also that loans don't get created out of air. Okay, loans don't get created out of air. To create a loan, you have to have some loanable asset, means an asset which you can mortgage. Agree, people? Sure? Okay, fine. So now, guys, see this point. Okay, I'm going to go to that point. See what is told in point number 6. Special packing credit limit. So basically what? Credit limit means a loan. Loan for what? Special packing. He's an exporter, so he needs money for the spending on packing and all. Okay, fine. So special packing credit limit. So some kind of loan. So it's going to appear in current liability. Available. Okay, fine. How? 90% of two things. Just small changes of words to be done in the question is export stock of raw material. This is correct. Export stock of raw material and export debtors. That words were just missing. So like, please write it properly. So 90% of what? Export stock of raw material and what? Export debtors. So guys, tell me how many assets we are mortgaging. We are mortgaging two assets. One, I'm mortgaging my export stock of raw material. First thing that I'm mortgaging. Second thing I'm mortgaging is what? Export debtors. Okay. Now people are worried, sir. Debtors are the people, sir. You don't mortgage people. And what if I don't repay? They will sell the people. We mortgage debtors means what? We mortgage their claims. It's not that I mortgage the debtors so the people are kept in the bank locker. And if I don't pay, one point a bank puts a tag MRP. Take this, take this. Hello, this is not allowed in India. No. Claims are to be mortgaged. People imagine a lot of things. So I need to be very clear. Claims are mortgaged, not no human trafficking, guys. Please, I don't teach that. So claims are to be mortgaged and not the people. Okay. So you have two actionable assets. One is export stock of raw material. Other one is export debtors. Okay. So I am very clear with this point that we are going to get a loan. Everyone out there, I'm very clear with this point that we are going to get a loan. Loan is going to be 90% of the two assets. Fair enough. Okay. Now have we estimated these two assets? export debtors and export stock of raw material. Guys, have we estimated? Thank you, Vishal. Have we estimated these two assets? Yes, my friends, we have estimated. Where are you? Okay, too far. See, export stock of raw material, guys, we only have done the estimation. Let me highlight it. Export stock of raw material is 2000. Right? Guys, now some people have a confusion. Sir, why not 12,000? 12,000 is my consumption. What do I mortgage? I mortgage my consumption or I mortgage my asset. If I have to see, if I need bad amount, if badly I need money, I'll mortgage petrol or I'll mortgage the car. I'll mortgage the car. So don't mortgage your consumption, mortgage your assets. Okay? Yeah, because sometimes people they like look for in the other row. In the is there any other amount I can ask for? 12,000. Why not 12,000? You put your finger on any number and ask why not this, why not that. 12,000 is our consumption or asset at any point of time in the go down would be 2,000. Right, friends? Okay. So we will mortgage this export stock of raw material and even the export debtors. So look for export debtors. This is the amount of export debtors. Now, again, don't come to this 36,000. That's a credit sale. We can't mortgage sales. We can mortgage our debtors. So we are going to mortgage these two assets, right? And we are going to get some loan. So what will happen, guys? Because we are mortgaging two assets and we are going to get some loan, no? The process would be eased out a little. So I'm going to get a loan over here. The name is what? Come on, right? Special packing credit limit. Okay. How you're going to get it? You're going to get it like this. 90% of export stock of raw material plus export debtors. Okay. So I'll calculate like this. 90% of how much is our export stock of raw material? 2,000 and export debtors are how much? 9,000. Correct, people? See, I prefer to do like this. I know it's difficult for you to do like this, but then if you could draw some line from here to here, don't do that in exam. Not where we got these amounts, just to have a clarity. Okay, fine. So this is 11,000 into 90%, so 9,900. What will happen, guys? See, that is how you generate funds in your business. You have some asset, you need money, mortgage those assets, make some money. Correct? So we are planning to mortgage two of our asset. Fine. So tell me any other current liability left out? No, we are done. So we are left with 7th point. Yes, what is that? It's an additional cash balance to be maintained as what, guys? Safety margin. I always love the way you people think. People compare. Sir, in the last question, it was only said safety margin. Now it is said cash to be maintained as safety margin. As if in the second question, you are going to give idli, dosa, dokla, coffee as a safety margin. Huh? If I'm going to travel, my wife tells me keep something extra for safety margin. Then I pick up my extra pair of shoes. I take one more bag. I take 2 3 bottles of water. I'm a porter or what? For safety, what we carry? Money. So the people, I tell people, no, compare questions, guys. Compare questions. See the differences. That only hits back. So in question number 2, it is told carry safety margin. Here it is told carry cash as a safety margin. So you always carry cash only as a safety margin. Right, people? Great. Okay, so safety margin needs to be added. For that, first we need to take a total of B, 5,500 plus 3,250 plus 9,900, 28,650. Correct, people? Jahnavi, you're typing so much. Where from get this skill here? I'm managing hardly to write the things. People are listening also, typing also. Jahnavi, what? See, you see, if your choice is to get confused, you have a full authority and right to get confused. It's a question's condition. Am I making any assumption? So let I give a note for that. Tell me, am I making any assumption? No, we are not making an assumption. We are just following what is written in point number 6. That we mortgage something and we are getting loan. So what we are mortgaging, it is written in the question. 90% of export stock of raw material. And that's why I have written it very clearly over here. In case I make you write note, what else I will make you write? I'll make you write this point only. So nothing new. So we have written enough. Okay? Nothing more is required. So A minus B has come 43, 100. Okay, fine. I hope you all have reached it here. Okay. Now listen. All those people were running ahead. Okay. All those people were posting answers. You are also alleged that some people are saying, sir, they are all repeaters and they are like in the sense repeater in the sense they have already attended, so they are posting it very fast. See, if they are posting it very fast, no, they cannot make mistakes. They are just posting from their copies. And everybody has a right to post the answer. I have not kept it as a privilege. If you are done with your solution, please post your answer. And I get it very clear. Some people are posting answers and the answers are going wrong. So that means they are doing on their own. Okay. Fine. So let's continue. Wait for me, no people. Sometimes please wait for me. I know you are very fast, but in the process of array guys, wait for the total and don't post your answers now. Wait. Plus safety margin. Hold. Don't rush. Please hold. Hold your horses. That's a phrase. What is written? An additional cash balance to be maintained as what? Safety margin. Till here it is everything fine. What is written next to that? Which is what? Guys, pay attention. Which is what? Which is going to be 10% of the total working capital. What you did, you read the word safety margin, you read the word 10%, whatever is there on the screen, into 10% plus, that's done. No. It's not that way. It's not that way. It is clearly told it's going to be 10% of the total working capital, guys. Where comes the total working capital? Total working capital comes after adding the safety margin. Correct? So once you add this safety margin, here you will get a net working capital. You can also say total working capital. This time safety margin, is everyone alive and listening to me? This time safety margin has to be 10% of which amount? The final net working capital amount. So how we would calculate that? Sir, we don't know that amount, but we know how to solve the equations, no? As we have done, no? So how it will happen, guys? This would be 100. This would be 10. Now, very important, then how much this would be? I'll be very interested how much this would be. Please now post your answers. Now you keep on putting chat box, no? Just that circle how much we should write. If this is 100, this is going to be 10. How much this should be? I'm reading your answers, so I'm speechless. What happened, sir? Why are you so speechless? What do I say, people? What do I say? I always tell some students, good that major mathematicians are dead by the time you solve this. All major mathematicians, by the time you solve this, are already dead. If they were not, no, they would have died seeing your answer. People, how can you calculate this as 110? You lost totally. Guys, this number plus 10 makes it to 100. How this number can be more than 100? This has to be 90. If you can't understand that, super. Thank you for explanation. 100 minus 10, 90. I don't know. People are like, just whatever number, no, add. Whatever number on the screen, no, just add. Hey, what, man? You want me to solve this or what? Okay, let's do that also. We are in search of this number. So let's call it x. So look out for x now. X plus 10 is equal to 100. Correct? Therefore, x is equal to, now you people have done what? You people have done like this. X is equal to 100 plus 10. Which maths is this? I have learned algebra, I have learned geometry, maths 1, maths 2. This is super advanced maths. This is beyond my understanding. You have to, you need to know the value of your x. Number x. Idiots. Has to be 90. 100 divided by 90 into 10 gives me 4788.88. Now, so make it 4789. Okay, add it. So you will get 47889 as your final answer. I don't know. It ranges between 75 to 80%, Jay. Jay is very happy. My charge has gone down by 1%. It's not that way. Yes, yes, Raj. Rohit, this is beyond maths. This is some supernatural phenomenon. Oof. We brace for the next cycle on the next question. Are we set for the next question? Are you are you in full control of your mind? Some safety margin answers have like actually shaken me like this, totally like this, kind of eight Richter scale earthquake or something like that. Ah, interesting. Yeah, the answer is here. In case like somebody needs working notes also. Yes, I'm scrolling down. Safety margin has created a lot of unsafety in the minds of people. Okay. These were the only notes, right? So let's talk about safety margin one more time. One last time. A minus B is 43,100. Hope everybody will agree. In that we add safety margin. We received request to show the calculation again. People are facing issues with this. So this will be our total working capital. And question tells you that get safety margin equal to 10% of this amount. So if it's 10% of this amount, this is 100, and this has to be 10. Then this plus is 100. Now, so this has to be balancing how much? 90. Then how to calculate? 90 is equal to 43,100. Then 10 is how much? Then cross multiply. Okay, people. So we'll cross multiply like this and like this. Correct. Then what to do? Kept my I kept my participants off. Like I don't want to see your reactions when whatever I'm doing. So 10 into 43 100 upon 90. Let's calculate. 10 into 43 100. It comes to 4,31,000 upon 90. It came to 4788.88 rounded off to 4789. Then I write this number as 4789. Then 4300 plus 4789 is 47889. Congratulations, you got the answer. Let me calm down. Jay is like, sir, I'm having headache in my head. I'm having headache in the knee. Chalo, people done. Wonderful. Patience. Who's asking for the break? I'll break your neck. Who's that? You're taking break only since last 5 minutes, man. You're just, I'm calculating, you're just enjoying. Chaitra, could you please put your message in the chat box, please? And if you have a very big doubt, then you meet me after the lecture. I'm going to go on to question number 5. Those who want to take break, please take break. I'm starting. Take me along with you. Means if you have a mobile. I showed the working notes. Na? Just now I showed the working notes only. How did we take 4.5? See, one more maths expert. Yeah, people, yeah. Come on. These are keep explaining all this to CA interest students. You're putting me crazy here. You cannot calculate this ratio. Array, my dear friend, 135 is to 30,000. How to calculate ratio? In your calculator, take the bigger number 135 divided by smaller number 30. You get how much? You get 4.5. When I do 135 upon 30, when I get 4.5 means it is understood below which is the number 1. 4.5 upon 1 is called as what? 4.5 is to 1. Okay, chalo, let's come to next question. Ma Limited. What people are smiling? You heard my motivational song or what? You don't understand it, na? But good. So we'll continue. So Ma Limited is commencing new project. So what to do? So we will send our best wishes to the Ma Limited. No, commencing new project means very important. All opening stock is equal to nil. That it means. Don't send your best wishes to Ma Limited. Yes. For manufacture of plastic component, the following cost information has been ascertained for annual production of 12,000 units, which is full capacity. Okay, friends. Jai, hold your horses. Material will be variable cost. Any issues on this? Guys, once for all, tell me, material is a variable cost, you agree? Means I don't want any controversies to happen in the future related to variable cost and fixed cost. No other controversies. Okay. Then direct labor and variable expenses. What is your guess, guys? Direct labor and variable expenses is the variable cost or a fixed cost? Fixed cost. People are nod your heads. Correct, correct. Very good. When you write direct labor and variable expenses, you underline variable expenses. People are, very good, very good. Fixed cost, a fixed cost. It is a variable cost. Okay, I hope you all understand, and we are just having some fun. Okay. So fixed manufacturing expenses. Now, smart students will message me after reading fixed manufacturing expenses. Which cost is this? Variable or fixed? Shweta, you're conveying to somebody else or what? Keep chatting. What are you doing in your mobile? At least keep it a little down. No, like I don't understand that you're chatting or watching something else. Afra is laughing. Sir, how you know we do like that? Hey, come on, people. I'm also a commerce student. We have a similar background. Okay, thank you. Some people have responded fixed cost. Very few people have responded. Others are still searching for key. Sir, it's a very difficult question. So we just cannot manage. Fixed manufacturing expenses are fixed cost. Depreciation. Now you need to really tell me, guys. Jokes apart. Depreciation is what? Variable cost or fixed cost? Fixed cost. People are like this. People are holding on. Arey, no, I told Asar, see this. It is a fixed cost. See, guys, understand. Once you get the machine in your factory, install it. You use it or you don't use it. It will be always depreciated at the end of the year with a fixed rate. Okay, so please remove that confusion from your mind. People are thinking like this, sir, if I produce less, then what will happen? If I produce more, then what will happen? It is going to get depreciated with the passage of time. At the end of the year, you will charge depreciation for 12 months. That's it. Got it clear? So it is a fixed cost. Yeah, fixed cost. Right, Samita. Okay. And then again, fixed administration expenses. So we need to understand that it is a fixed cost. Okay, friends. Yeah. Yeah. Also right. Also right that it is a non-cash cost. Perfect. Okay, fine. Wait. Now, before I go further, from my side, I'm going to share some information about variable cost and fixed cost. Okay. I know that you all know. Just check out whether my knowledge is correct. Yesterday's dialogue budgie between CC and TB. Okay. So when I say variable cost is say 10 rupees per unit. So units reduced. Everyone please pay attention and check whether I am knowing the correct things or not. I am very sure you know all the correct things. Just confirming my knowledge with you. Into cost per unit. Total cost. So variable cost is 10 rupees per unit. I produce 1 unit. It's multiplied by 10. My total variable cost will be 10 rupees. I produce 2 units, it will be multiplied by 10. So my total cost will be 20 rupees. I produce 3 units, multiplied by 10, total cost is 30 rupees. I produce 8,000 units, multiplied by 10. It's boring not to go up to 12,000 like that. So I skipped in between. Okay? Else probably next for 2 years we'll be doing this only. So I have to skip in between. People are not happy with the idea, sir. What after 1 to 3 you direct take 8,000? How you will find, sir? How you will understand? Sorry. 9,000 into 10, 90,000. Anybody slipping on that side? Please. Important discussion. 12,000 into 10, 120. What happened, guys? Cost per unit remains same. Understand? Everybody understands this? Okay. Fine. Now let's talk about some fixed cost. Okay. See, guys. Yes, thank you. Those who have understood means my information up till here is all correct. Okay, thank you. Thank you for confirming. Let's say plant capacity. Let's say means taking the question 12,000 units. Okay, and the fixed manufacturing expenses are 72,000 rupees. You can say something like factory rent. Okay, what is the maximum? What is the maximum capacity? 12,000 units. Okay, so let's start. Units produced, fixed cost, cost per unit. Let's say we produce all 12,000 units. How much is our factory rate? 72,000. It will get divided amongst 12,000 units. So per unit it will be 6 rupees. Okay, people, right? Suppose I don't want to produce this much and I produce only 10,000 units. Will the fixed cost change? Will the fixed cost change? No. Everybody agrees on this? Okay. But so this will remain 72,000 only. But obviously per unit will go and change and become how much? 7.2. Good. Okay. Look, let's say I produce only 9,000 units. Will this change? No, sir. You will be at loss, sir. Okay, fine. Now I want to produce less. What's your problem? It's up to me. So it will come to 8 rupees per unit. Suppose I decide to produce only say 8,000 units. Will this change? No, it will remain same. 72,000 divided by 8,000 will come to 9 rupees per unit. I produce only 6,000 units. So 72,000 divided upon 6,000 units, it will be 12 rupees per unit. Correct. So my average fixed cost, you can see, is increasing with the reduction in number of units. But whatever I produce, pay attention, whatever I produce, fixed cost will remain same. Let's be very clear. Let's be very clear. Chill, guys. Chill. Total fixed cost will be always same. Do you guys confirm what I discussed with you? Now I don't want anyone to put any doubt on fixed cost. I'll personally come that suddenly from the laptop. I'll come. I'll flow to the wire. I'll choke you. Jokes apart, you have understood this fixed cost concept. I'm sure you know it. But sometimes people they love to get confused. So I love to remove that confusion. So keep this in mind. I want to take a screenshot of this and take a screenshot of this and keep talking about this. Okay. So you have no confusion now. Okay. I hope people understand variable. Somebody's asking me for a variable cost explanation again, and I hope that's a just joke. 1 unit of raw material costs you 10 rupees. So 2 units will cost you 20 rupees. 3 units will cost you 30 rupees. This practice at home up to 100 units. Make the chart and show me tomorrow. I'm dying. I'm dead. Any problem? If I take variable cost as 10 rupees to explain. What questions do people ask? Why variable cost is 10 rupees? Hold on, man, hold on. We will survive. Okay, let's go ahead. So fixed manufacturing expenses, I've taken this as an example, are 72,000 total, right? For 12,000 units, this all working is done. So even if you produce less, amount will remain same. So this, what you multiplied with what, sir? You did not write. How people understand? Very true. 12,000 into 6 gives you 72,000. Similarly, depreciation is also fixed cost at 10 rupees per unit. 12,000 into 10 is equal to how much? 1,20,000 total. Fixed administration expenses are 4 if you produce 12,000. So 12,000 into 4, 48,000 total. Selling price is 96. Why? It is given in the question. Selling expenses are 5 per unit, of which 80% is variable. So we have to split it and write it separately. Okay. So, like if I had to write over here, no, selling expenses. Suppose I was to write in this table only. So variable is 80%. 80% of 5. So how much it will come to? 4 rupees. Correct. So I produce more, I sell more, I'll charge per unit 4 rupees. Fixed would be how much? So fixed would be 1 rupee. 1 rupee fixed, assuming 12,000 products. So total would be how much? 12,000 for fixed one. Whatever you sell, this is going to remain same. Now people always have an issue like how selling expenses would be fixed because we were hammered like this, and selling expenses are always variable. But there can be some selling expenses which can be fixed. Given in question is always right, but there can be no. Can there be any example? Advertisement banner that I put up outside railway station, outside airport, or outside bus stand. The banner, putting that banner, advertisement banner, that's a selling expenditure. The rent of the banner depend on what you sell. No, he tells you, see, my rent is 12,000. You pay 12,000, then you sell. You don't sell, whatever you do. My rent is fixed. So that's a selling expense. You know what? Sometimes it happens like that. Now, sales managers or salesmen have a fixed salary. Okay, say for amount, say for example, 30,000 is a per month fixed salary. Then after that, you sell more, you get more commission and incentive. But fixed salary component is always there. But that depends. So there's nothing, no big news like it is possible. Okay. So in the first 2 years of operation, production and sales are given to you. First year, production is 6,000 units, sales is 5,000 units. So you are left with 1,000 units over here. Closing stock. This will become opening stock next year. Huh? Remember that. I hope you know that much. and you produce 9,000 and you sell 8,500. So what will be my closing stock? 1,500 units. Ah, sir, minus karo, you get only 500. Arey, yaar, so opening stock is also there. No, 1,000 plus 9,000. I will have 10,000 units at disposal. I sold 8,500. So we are just reading everything related to cost sheet and income statement. So where is your topic? Working capital. Coming, guys, coming. Okay. So to assess the working capital requirement, some information is given to you. Stock of material is 2.25 months. Average consumption. Okay, fine. So in current assets, I'll write stock raw material 2.25 months. Work in progress is nil. Good. Debtors is 1 month. So I'll write over here. Debtors 1 month. They need a cash 10,000. Okay. Then creditor for supply of material is 1 month. So in current liabilities, I will have creditors 1 month. Creditors for expenses is 1 month. Average of all expenses. Remember in the last question we did something very similar. I'll show you. Otherwise people don't remember. See this. Outstanding expenses all three. We totaled up everything. Guys, you remember this? Hello people. Okay. Thank you. So now something same we will do over here, guys. We will find out all the expenses, and for all the expenses 1 month. So I'll write over here outstanding expenses 1 month. Okay, what to prepare? See, this time they are telling you you prepare a projected statement of profit or loss, ignoring tax. Guys, please pay attention to the words. Later on, don't come and tax. Where you want tax? It is written, no tax required. But you have to make it for how many years? 2 years. And see, till now in all the questions, we will like doing those income statement as a rough work. Correct? We've been doing that income statement as what? As a rough work. Now what is going to happen? It's a part of our answer, main part of our answer. Clear to everyone? So how we will prepare? That I will tell you. That's a part of your answer. That's what only I'm asking. Okay. And a projected statement of working capital, that also for 2 years on which basis? Total basis. So it's not written 2 years, it is written over here. So it is applicable to both the points. Okay. So let's start. Send some good wishes to me. Starting now. All the best. No? Thank you. Thank you. So let's start with our income statement. Seriously, people are sending. All the best, sir. Oh, so nice of you. Thank you. What is the implication of ignoring tax? Very good. Can you calculate tax? Hello, guys. Can you calculate tax in this question? No. Why? Rate is not given. That's why it is said what? Ignore a tax. So, my dear friends, the day you will understand that you are learning financial management, you know, in your heart, soul, blood, na, accounting knowledge is mixed. People want to prepare P&L account, want to calculate provision for tax, and want to make a payment of taxes for the next year. And want to prepare a balance sheet, get it audited. They just forget that why this income statement is required. This is just required for some base for estimation. People have also asked me, sometimes I don't, selective listener I am. Sir, in your estimation, there are no non-operating expenses. Very good. Means I'm estimating a P&L account, and first I estimate there will be loss on sale of fixed asset. There will be loss by fire. Who estimates like that? Before you start your business, in your in your estimated income statement, you're first writing loss on sale of asset, loss by sale, loss by fire, loss by earthquake. You only put some gaslight and burn your whole business. Guys, understand this is not accounts. where you're just focused on preparing the final balance sheet. Why we are making an income statement, I agree. But that income statement, is it out of some legal compliances? No, we need a base to estimate the numbers. Okay, I should know tentative sales. I should know tentative cost of goods sold. How much are they? I should be able to estimate how much raw material stock should be sufficient. Okay, so see, because I want to at length discuss this income statement, I know that there'll be ocean of, there'll be like firing of messages in my chat box now. Okay, so main focus I'm keeping on explaining the things. So income statement I've kept ready. We'll discuss each and every amount properly. Right? Okay. Estimation we'll do it together. Okay. So I request you all to give a proper attention to the numbers. It's pretty important. Yeah. See, first of all, what we are doing, we are making a projected statement of profit and loss of Mala Limited. Be very clear. It's a projected statement. Okay, fine. Units produced 6,000 in year one, 9,000 in year two. Units sold 5,000 in year one, 8,500 in year two. Where do we get this information? Did I go to Mala Limited's office? No, it is given there. Clear, guys? Everybody is clear about it? Okay. So now let's come to the next point. Okay, fine. Now I'm going to calculate sales. Is the selling price given in the question? 96 rupees. 96 rupees. I want all of you to listen each and every word of what I'm talking. Correct? I don't want you to deviate even for a second, not even for a micro millisecond. Okay. So you agree that 96 rupees is given there? Given in the question. You can check your question. Okay. So how do I, now it's a very tough calculation, but how do we get a total sales? Really, guys, is it a tough calculation? Come on, accept that I am too much sarcastic many a times. Hey, there is no such tough calculation involved. You just have to 96 rupees into what? Units sold. Units sold. So 96 rupees into, first I will write 5,000. And for the second year, I would say 96 into 8,500. Kindly use that machine that you have, no? Calculator. Okay. Please use these numbers like this. And you will get the sales values. With the common consensus, we go ahead. You all have successfully calculated the values of sales. Charan not calculating anything, just enjoying what I'm talking. Charan, please use calculator, man. Don't be like that. Just do it. No, for my sake, you do it, please. It's good that you calculate, so you remain over there. And I find people damn busy copying the things. People, shh, take a screenshot of this later, but first you understand the things. Estimation of working capital we'll do together. Understand the numbers. Each and every number understanding is damn important. Everyone out there, huh? Everyone out there. Okay, so fine, we'll continue. So everybody is sure with the sales calculation. Okay, fine. So now I hope and I'm sure that you are aware of this equation. Sales minus cost of goods sold gives me gross profit. Everybody is aware of this, right, people? Sales minus cost of goods sold gives you what? Profit, gross profit. Okay, great. Thank you. Now, how do I calculate cost of goods sold? It's a production process, guys. So first I need to understand how much did I introduce into the process, right? So that's why we talk about what is getting introduced into the process. See, but naturally, what is going to get introduced into the process? So raw material consumed, labor, fixed manufacturing expenses, depreciation. After I write this, people are like, no, 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 sir, write administration there, write selling over there. Then I have to remind the people, hello, people, something called as trading and P&L exists in our lives. Okay, so only a few things will come. But when I talk about introduction into the process, how much did I produce? The units produced are 6,000 in the first year and what? 9,000 in the second year. 6,000 and 9,000, right? So for all these stuff, how am I going to multiply? I'm going to multiply by 6,000 and 9,000 units, right? Okay. So you produce that 6,000 units, so 6,000 into 40. Calculate. Calculate that. Just don't sit idle. Unless and until you do that, you will not get a feel of understanding the things. So 6,000 into 40, 2,40,000. Amount justified. Yes, please calculate. Correct. Correct. Similarly, 9,000 into 40, 3,60,000. Sir, we know the table of 9. Sir, 9 4 are 36 and put a number of zeros. Doesn't matter. Good. Yes, we. Okay, so both these amounts are justified. Let's go to direct labor. Again, a variable expenditure, 20 rupees. Right? So same thing. I would here also multiply by 6,000 and 9,000 units. So 6,000 into 20, 1,20,000. 6,000 in, sorry, 9,000 into 20, 1,80,000. Come on, tell me, did you get that? Did you get those numbers? You. Tanvi is like you. Great. Yesterday also I had asked, dear student, uh, should I, how, how do I call you? K K124690. You reply to so many questions of mine. You send me smileys. You say encourage me. But in your name, it is only FA. How do I know your name? My dear student, thank you, Faizan. Now at least I will never call you fixed asset. I call you Faizan. What's in the name? Correct. Very good. I think we should stop doing this and we should get into philosophy and start. I opened some Shakespeare book online. What's there in the name? Wonderful. People are here to give. Oh, finally, give it. So these four amounts are clear. Now we are going to talk about fixed manufacturing expenses, guys. Don't don't cheat me now. We had a huge discussion over here about the fixed manufacturing expenses. Whatsoever you produce, whatsoever you produce, fixed cost will remain same only. Guys, confirm that fixed cost will remain same only. Sure. Okay. So that means now, see, first I write this fixed cost 72,000 in both cases. Okay, that is not going to change. What will change? Only the cost per unit will change. So divide the 72,000 by 6. So you will get this 12. Divide the 72,000 by 9,000 units. You will get this 8. Is this understood, people? Okay. Okay. Let's continue further. Let's continue further. Same thing is going to happen for depreciation. Now, once you understand this logic, same thing, guys. Depreciation fixed cost I have written over here 1,20,000. Now, whatsoever you produce, fixed cost will remain fixed 1,20,000 at both places. Simple. Divided by number of units. 120 divided among 6,000 units will give you 20 rupees per unit. 1,20,000 divided amongst 9,000 units will give you 13.3333. Sir, I did not like this number 13.33. Okay, you write of your choice, but the correct answer is 13. Sir, recurring number we don't like. It's not about your personal choice, guys. It comes that way. So this four things is what you have used in the production, and that's why it is called as what, guys? It is called as cost of production. So take a total of these four things: 240 plus 120 plus 72 plus 120. 552. How many units did you produce? 6,000. So for 6,000, listen to me carefully. For 6,000 units, you spent how much? 5,52. So how to get per unit? How to get per unit? 5,52,000 rupees. 5,52,000 rupees. 5,52,000 rupees. I spent for how many units? 6,000. So divide by 6,000. Divide by 6,000 is equal to how much? 92. Correct? Everybody able to understand? Very smart. Thank you, Samita. Nobody wrote other than you. Everybody was having a doubt. Sir, why you are taking a long cut, sir? We have already done a shortcut, sir. 40 plus 20, 60. I'm not smart as you know. 40 plus 20, 60 plus 12, 72 plus 20, 90. Correct. You will be plus smart, not that. I'm not that smart, so I did that way. Correct. Oh, thank you. Thank you for telling me. You can add per unit column. So sweet of you. Thank you. Where is she? Afra. Huh? Afra, thank you for the suggestion. I respect your suggestion. Next time I'll do that. Thank you for adding to my knowledge. What do I do? Well, you see, if I take a total, people ask me, then why you're not dividing? Now I divide, then people tell me you take per unit. So it's like that. So I have to show one thing and I have to listen from your side only. So now you know how to get this 81.33. Jokes apart. It's important to understand the things. So now we are going to tap on this equation. What is that? See, let me show you empty space, empty space, empty space, empty space. Yeah. So, guys, cost of goods sold is equal to what? Opening stock of finished goods plus what? Cost of production plus, sorry, minus closing stock of finished goods. Correct. We've already reached on cost of production. So in that we'll add cost of opening stock of finished goods less what? Closing stock of finished goods. We will be getting what? Cost of goods sold. Right, friends? So that's what we're going to do now. So here you can see in your format that we are already at cost of production. In that we add opening stock of finished goods less what? Closing stock of finished goods. Okay, fine. So see in the very first year, what will happen, guys? In the very first year, opening stock of finished goods is going to be nil. All opening is equal to 0. But we have already discussed that there will be a closing stock of finished goods of 1,000 units. So see this note. Okay. See, opening stock is nil in year 1. Production is 6,000. Sold is 5,000. So closing stock is 1,000 units. Now my task is to value these 1,000 units. Sir, it's very simple, sir. It's already arrived, na, sir. 92 rupees per unit. Right? So 92 into 1,000, sir. 92,000. Absolutely right. That's what we have done over here, guys. So I scrolled a little. So how we will value this 1,000 units? They're valued at first year's cost of production. That's it. 92 rupees per unit. 1,000 units are the lying there in the stock. So what will be the cost of those 1,000 units? 92,000. Right? And that's why over here we write 92,000. So 552 minus 92, how much is left out? Do it. Plus 0 also. Yes, yes, yes. 52 plus 0 minus 92,000. Check out 460 is left. Now what do? We simply, let me zoom it out a little. We take the sales minus this cost of goods sold, 460. What we get? We get gross profit of 20,000. Is this clear, guys? Everyone out there? The process is clear. You understand. I'm putting so much time in making you understand that income statement and cost sheet. And please, Charu, don't keep on writing right now. Take a screenshot and later on you copy. Leave a side for this. Okay. Otherwise, you have a divided attention. Then you miss on one or two dialogues and then you're gone. Please, any one of you, please don't copy right now. Just focus on understanding the numbers. Just focus on understanding the numbers. Okay. Yeah. Now let's come to second year. So first thing we all know, closing stock of year one would be opening stock of year two. So I hope this 92,000 is no issue at all. So how did you get this closing stock of finished goods of year two? Yes, we'll discuss that. See, first you see these numbers here. Opening stock 1,000. You agree? We brought this 1,000 from year to year, guys. I hope you all will agree on this, right? Sure, huh? Okay. Yeah. Wait. So this 1,000 plus 9,000 produced. So what's my total? 10,000 units I have at my disposal. Out of that, 8,500 units sold out. Sold out means I estimate that it will be sold out. So my closing stock in the terms of, units will be 1,500. Right, guys? So you're clear with the number of 1,500? Okay, fine. Now, important, how you will value. So as we did it now, first year's closing stock will value at first year's cost of production. Second year's closing stock will value at second year's cost of production. Absolutely right. So how to do that? See now, 1,500 units. See, 1,500 units. 1 minute. So 1,500 units into what? 81.33333. And your answer will be 1,22,000. Your answer will be how much? 1,22,000. Otherwise, you can do like this also. 7,32,000 is for total 9,000 units. So how much for 1,500? Then do that cross multiplication. Okay. Still you'll get the same number. So that's how we get this 1,22,000. Once we get that, add a 92 minus 122. This is cost of goods sold. And then adjust with the sales. Sales is see how much? 8,16 minus this 702. You get this gross profit of 114. Guys, have you understood till here? Thank you. Thank you so much, friends. If you have understood, I'm obliged. I'm obliged to you, indebted to you for the whole life. Okay. Once we reach gross profit, as usual, P&L part will start. Administration expenses, which are 48,000, fixed administration expenses. Okay. Variable selling expenses, 4 rupees per unit, multiply by number of units sold. Correct? Now we are into P&L part. So multiply by number of units sold. How much units sold in first year? So not showing that. I'll show 5,000. 5,000 into 4, 20,000. How many units sold in second year? 8,500. 8,500 into 4. Please do it on calculate. 34,000. And the fixed obviously will remain 12,000. So you want to calculate profit or loss? You know how to do it. This is your gross profit. And 20,000 is your gross profit minus all the expenses. So it will come negative. So let it come negative. Minus 20 minus 12. So in the first year, you're supposed to have a loss of 60,000. Okay, is that fine? Okay. In the second year, This is your gross profit, 1,14,000 minus 48,000 minus 34 minus 12 is going to be 20,000. Okay. So I really wish that you have understood each and every calculation that I've shown. Okay. So friends, uh, take a screenshot of all this. I think till here we have to go, but at least you take a screenshot of this. So now when we solve, no, you'll have this in front of you. I wish to start now. I'll scroll up. Should I continue? Should I scroll and then show you the format? Yeah. Okay. Okay. So this is a routine thing now. There's no big no big difference. So please draw this. Now see, you have to be very smart. Listen to me. Listen to me. That income statement and that part. What will you do? You write it at the end. Your choice. If you are okay, you leave the space. You leave two sides. That is the best thing. Little here and there doesn't matter. You leave complete two sides. Did you hear me clear? For making income statement and those small things, how many sides you leave? Two sides you leave, and then you make this format for the estimation of working capital. Okay, guys, we are going to make it for 2 years, so you will see a small change in the amount. No, I'm having two columns, right? Year one, year two. Got it? Instead of writing the whole thing two times, it is good to make the calculation column little narrower and get it solved over here. So I'm giving you 2 minutes. Make it quick, please. Screenshot ceremony we'll do at the end. That's fine now. Everything, whatever you have solved for the whole day. That's okay now. So I'm starting now, guys. Okay. You know what? Actually, the whole question is about income statement only. It's like a question on. It's like a question more inclined toward cost sheet, right? Now, the moment we start solving, except for the point of creditors, now something is like we just complete within next 5-10 minutes. Okay, fine. So we have a ray of hope that our lecture will finish on time, because people are calculating like, oh shit, it's more than 12:40. How we will finish now? So it's going to extend the lecture or what? Don't worry. And you know what? At the end of the lecture, people are always like more intelligent. They understand the things very fast. The things which are said, that they also understand. Things which are not said also they understand. Okay, once again, let's put the question for a moment. I'm taking my questions so that I don't have to scroll again and again to the question. Okay, so let's start. What we discussed, yeah, it's there. The same thing is here. Okay, fine. Right. So let's start. Current assets. Let's write stock. Stock of raw material we are holding for 2.25 months. Okay. We have some raw material consumption calculation already done. You messaged me also. But yes, I will show you the income statement. See, 2,40,000 and 3,60,000. That is our raw material consumed. So here we'll write. Now we have to calculate 2 times, obviously. 2 lakh. So should we take average? Please don't come out with such innovative features. Okay, we calculate 2 times separately. 240 into 2.25 divided by 12 came to 45,000. And 360 into 2.5 divided by 12 came to 67,500. Okay. See, so this is my expected raw material stock for year end 1. This is my expected raw material stock for year end 2. Did you hear my words very clear? Yes. WIP is not there. Right, friends? Is WIP given? No, sir. Obviously not given. It's nil. But is the finished goods given? Yes. Finished goods are given, guys. Sir, no duration mentioned. Did I say that duration is mentioned? But it's obviously visible in the terms of units. See, every time they may not tell you that finished goods equal to 1 month, finished goods equal to 1.5 month there. But finished goods stock is available whose valuation we have also done, guys. Remember, so we have already valued finished goods. See here, year 1. The valuation of finished goods is 92,000. Year 2, 1,22,000. We have put in so much of efforts to estimate this value of finished goods, and then you say, so duration not given. Okay, duration not given, but the amounts are there, and units are there. We can utilize that. Okay, so stock is done. Then we have debtors for 1 month. Hello, guys. This is a place you need to think twice. Which method we are following? Total basis we are following, correct? So it works out on sales, fine. So the sales you have to calculate, sales you have to take into consideration. Total basis, sales. Look, year one sales is 480, year two sales is 8,16,000. Okay, fine. So 480 and 8,16,000. Into 1 by 12. So this would be 40,000. And that much table of 12 we know now. This I won't know and calculate. 8,16,000 divided by 12 comes to 68,000. Right? Debtors are done. Then we need cash. And what is told in the question? Cash has to be 10,000. That's it, friends. See, understand that is the beauty of the sum. The sum is completely focusing on what? On the income statement aspect out of it. Okay, so we are done. And take a total. This will call as what? Gross working capital. 45,000 plus 92,000 plus this 50,000. 1,87,000. 67,500 plus 122 plus 7. 2 lakh. 67,500 plus 122 plus 2,67,500. Done, guys? Okay, so now what? Less what? Current liabilities. Okay. Now in current liabilities, we have creditors for 1 month. Wait, now there's a turning point in the question. Creditors, see, I've been always asking in each and every question. Creditors depend on what? Credit purchases and not raw material consumed. Creditors depend upon what? They depend upon what? Credit purchases. That we don't have the amount, we use raw material consumed. But creditors basically depend upon what? Creditors basically depend upon what? They depend upon purchases. Why we were putting purchases is equal to raw material consumed? With our assumption that opening stock is equal to closing stock. Can we make this assumption over here? No. It's a newly commenced business. So in first year, opening stock has to be nil. Check out your important points and check that third important point over there. You remember we have to put opening stock is equal to nil. Right, guys? See this. Assumption of opening stock is equal to closing stock won't apply to newly commenced business. Then we will have to calculate like this. We'll have to write this whole formula. Put opening stock is equal to nil, then purchase minus closing stock, then take minus closing stock that side. So RMC plus closing stock of raw material will make it to purchases of raw materials. Is that clear? You remember this now? Okay, so accordingly we will have to change our calculation. We just cannot copy paste. We just cannot copy paste raw material consumed. Okay, so see what we have to do then. Calculate like this. Working note for calculation of purchases for year 1 and 2, since it is newly commenced. So I'm talking about year 1. Raw material consumed is what I know. How much was that? 2,40,000. Opening stock of raw material is nil, obviously because it is newly commenced. Purchases is what we to find. Guys, closing stock of raw material. I've been highlighting it since last minute. Okay. See, guys, you have only estimated this closing stock of raw material in year one to be 45,000. So then if you have estimated, use that in that equation. Correct? Do you agree with this, guys? Okay, so put that 45,000 as an estimated closing stock of raw material. Solve this. Please don't further kill the mathematicians. So your purchases would be 2,85,000. Similarly, you can do it for year two. Raw material consumed is 3,60,000. Guys, please understand, closing stock of year one would be opening stock of year two. So I'm going to copy this number over here. Purchases is what we still have to find. But the closing stock of raw material for year two we have estimated. Now you have your solution. Go into that. Don't ask me to scroll. Look, please carefully do minus plus. 360 on the left hand side. 45,000 goes that side, it becomes minus 45,000. Minus 67,500 goes that side, it becomes how much? Plus 6,500, and your purchases figure would be 3,82,500. So now we know the purchases of somebody has calculated a wrong amount for the purchases of year two, or it might be a typo, I don't know. So now I'm taking it over here. Okay. So in year one, how much? 2,85,000 is the purchases. Right? So it's 23,750. 31,875. Hope you can verify these numbers. Okay. Yeah. Yes, right. Okay, fine. So after this, what is left, guys? After this, we are left with outstanding expenses 1 month. Pay attention. A lot of outstanding expenses are there. You know what? So what am I doing? I'm uh, I'm going to take all the outstanding expenses at one go for both years. Fine. Then take their total. So it's like I'm making a column over there. So it's year one, so year two, and I'm going to first list all the expenses over here. Okay, friends. So for that, we will have to go to our income statement and find out all the expenses. Okay, see. I have to mark it. Okay, yellow I'll mark because I'm not yet marked by yellow on anything. Okay, see. For raw material, we are making payment to creditors. So that is already covered. So direct labor and variable expenses are yet to be covered. 120, 180. The payment would be done after a month. Correct? We are trying to identify all such expenses. Guys, you listening to me or I'm talking all alone? Yeah, you said you came alone in the world and you'll die alone. Correct. But in between you have to talk, you have to listen to me, no? Listening. Thank you. Yeah. So fixed manufacturing expenses is one such cost correct? Outstanding. Depreciation, we all know, is not to be paid to anyone. So it's not to be counted as outstanding. Fixed administration expenses, third expense I could locate, will be outstanding. Similarly, variable selling expenses of 20,000 and 34,000 and fixed, fixed selling expenses of 12,000 and 12,000. So how many we could identify, guys? 5 things we have identified. Everything is outstanding. Okay, let's start. Let's write this. Okay, so direct labor and variable expenses 120, 180. Year 1, 120. Year 2, 180. Got it now? That the way we are presenting it. Okay. After that, we have to write fixed manufacturing expenses, fixed administration expense. Okay. Fixed manufacturing expenses. So both here it is 72,000. Fixed administration expenses, both here it is 48,000. Okay. Now we are left with selling expenses. So selling expenses fixed 12,000. That I remember 12,000. And selling expenses variable one was 20,000 over here and 34,000 over here. Correct? Cross verify. 20 and 34, 40, 20. Okay, fine. You understood now what we did? You're just taking a sort of a shortcut, like instead of doing 1 by 12, 1 by 12 for everything, just take a total of this one. It will become easy for us. Okay. So 20 plus 72 plus 48 plus 12 plus 20 came to 272. It's 272 into 1 by 12, right now? And the answer is 22,666.66. So let's make it 22,667. Yeah, okay. Let's calculate the other side. 180 plus 72 plus 48 plus 12 plus 24. 346 to 1 by 12. So divided by 12, I get 28,833. You're giving me the answer. Yes, right. Yes. Okay, fine. So now we can take a total of B. Seven 750 plus 46417. So we write over here. Net working capital A minus B minus 187 140,583. Okay. So it's 31,875 plus 28,833. 60,708. Subtract 267. We get 206,792. Enough. People, you realize that working capital part was very small. The whole focus was on what? Was on what? Income statement. Yes, correct. So fine. Let's take all screenshots, whatever you need. We go at the beginning of the class. Today we started with question number 3, right? So I'll keep from the very beginning. Yes, question number 3. Please take the screenshot that you need, and it's like a screenshot, not an artificial artistic painting. So like click, 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 click. Done. Yes, the screenshot ceremony begins. Let's applaud. We remember this X for a long time. 90. There is nothing on page number 5. It's just a capture. You need it. Okay, take it. Enjoy. Enjoy. Go ahead. Hmm. Scroll, scroll, scroll. Scroll, huh? I'm going ahead. Scrolling further. Last one. Yep. Done, guys. You're done. The pages are over. Yes. The screenshot ceremony is over. Yes, who's that? Jagan. Bye, bye, bye. Those who are leaving can leave. Doubt ceremony starts. Very true. Jagan, you turn your video on, then I'll talk to you. Meanwhile, Chaitra, you ask.
Sir, once could you show me question number 6? We done with that note, sir.
No, question 6 is not yet done. Next lecture.
No, for us we done, no, sir. In early bird batch we are done, right, sir?
You will be flowing with this batch again. Not
Okay,
now.
okay, sir. Done. Thank you.
Jagan.
Sir, sorry, sir. I don't have any video camera, sir.
Go ahead, ask.
Okay. Sir, I just need a clarification in the third question, sir. In the question in work in progress, they have given that the degree of completion is 50%, sir.
Yes.
So we have taken that only 50% of raw materials get introduced here, sir.
We have taken
That only 50% of the raw materials have been introduced there, sir.
Actually, your voice is cracking a lot. See, I will tell you, work in progress involves what? How
Raw
many?
materials,
Uh,
wages, and overheads.
correct. Then raw material, wages, and overhead. The total is how much? Check for yourself. Everything's 50% we have taken.
Yes, sir. That means only 50% of the raw materials have been introduced there, sir.
Then nothing has been introduced. Please try and understand.
Yes, sir.
This is an
Yeah.
estimation.
Okay, sir. So that means
Please first of all make your thinking clear that this is a future event which is going to happen. It's like I'm
Sir.
planning for your marriage ceremony. So I'm saying, okay, in Jagan's marriage, 500 people are going to come. Each one of them will need two dosas. So I need to have a raw material for 1,000 dosas. Has Jagan's marriage taken place? I don't know. If it has already taken place, it will be your second marriage. Else it is your first marriage. Jokes apart, but then it's an estimation, my dear friend. Nothing of this has happened actually. It is building castle in the air. Now ask.
That means 50% of the raw material have been kept idle, no, sir.
Nothing has been kept idle. I repeat again. Nothing has been kept idle. This is what I need, the amount which I'll need in future if my 50% of my raw material is in WIP.
Yes, sir.
Not the whole amount of, see, first of all, you need to understand, WIP is only for how many weeks?
4 weeks, sir.
4 weeks. So whatever is your total raw material consumed, out of that only 4 weeks would be proportionately in the WIP.
Okay, sir. Yes, sir.
So whatever is your raw material consumed, I don't remember the number. What is that? 68 something, 68, 40, 68 lakh 40 something. Wait, I'll share this. We're talking about question number 3.
Third one, sir. Yes, sir.
6840. Yes. So what is your raw material consumed? 6840. The 6840 is for the full year.
Yes, sir.
Expected, nothing has been happened. Actually, I repeat again and again. What do you expect? What do you expect? That it will be 4 weeks into the process. So 6480. Sorry. So how we should calculate? We should individually calculate like this. 6480 is for the whole year. That is how
Yes,
many weeks?
52 weeks.
Correct. What is the process?
4 weeks.
How to calculate this? You know that?
Yes, sir.
Yeah, because today I've taught that also. Into 4 divided by 50. I got my answer 4,98,462 something.
Yes, sir.
This will be my WIP. But then how much I'm keeping aside? And my dear friend, please, the day you will understand, you'll be at ease, that I'm just planning. I have given so many examples on day 1 also. Let's say I'm going to do a painting work at my home. Arey Baba, nothing of this has been produced today. Nothing has been in the pipeline also. This is an estimation. I would require raw material of 4,98,462. So I say, let me arrange half the amount of this. So I say, fine, 498 what divided by 50? 498, 462 divided by 2. That's 50%. So 2,49,231 rupees of money would be kept aside for buying what?
For buying 50% of the
for buying raw material.
Yes, sir.
Which would be in the process. That's it.
Thank you, sir.
Now, if 50% of this, 50% of this, 50% of this, then what did I do? I took a total 1,51,20,000. Got my point?
Yes, sir.
Directly applied 50%. Instead of doing all these calculations individually, I directly applied 50%.
Okay, sir. Thank you, sir.
Yeah. What do you want, Devesh?
Sir, question number 2. Why did we multiply manufacturing expenses with 12?
Question number 2 you are talking about.
Yes, sir. I was thinking
yesterday's question.
Yes, sir.
You were not there yesterday.
I was there, but I was unable to ask.
You were into?
I was unable to ask, sir.
You were unable to ask. So bad. My apologies. What do you want? Question number 2, na?
Yes. In question number 2, it is written manufacturing expenses outstanding at the end of year is okay. It is given. Then why did we multiply? It's already in of year, right? Here we multiplied into 12.
Arey, my dear friend. Others are here for entertainment or what? If you have no doubts, go. Aparna, what? You're laughing. Arey, Devesh, have you ever seen a calendar in your life?
Yes.
Very good. How many months are there in a calendar?
12.
Very good. 80,000 is outstanding for 1 month.
Okay, but it's not written right, sir. It's for 1 month.
It's not written.
No.
Yeah, I have got some different notes, huh, Devesh?
Yes,
How
sir.
come it is not written in your notes? Devesh,
Yes, sir. Yes, sir.
Devesh.
Sir,
Manufacturing
hello.
expenses outstanding at the end of the year. These are paid 1 month in arrear. Is this line there in your book?
Yes, yes, yes.
Hey, so my dear, this is outstanding for a month in array. A month's outstanding is 80,000. That means a month's expense has to be 80,000. No,
Okay, okay. Now I got it.
I appoint you as my personal assistant at a salary of 10 lakh rupees per month. Okay.
Okay.
Suppose, it's a suppose now. What's the problem? 10 lakh or what? 1 crore. It doesn't matter. It's a suppose. So I say it's
Hello.
outstanding for a month, 10 lakh rupees. So that means a month's salary
yes,
is
I
10
got it.
lakh, then the year salary is 1 crore 20 lakh. Ray.
1 crore 20 lakhs.
Correct. This figure, you get it. Who else is left? Yeah. Tell me.
Sir, this is a doubt from cash flow statement.
Uh-huh.
A simple transaction, sir. You can tell it by words.
You can go mute. Sorry, you can go put your audio off, video off. Your voice is cracking.
Sir, are you able to hear me?
Now I'm able to hear.
Sir, this is a doubt from cash flow statement, sir. A simple transaction you can tell it by words. Sir, loans and advances given to employers and the interest earned on them. Where should I put it, sir?
Loans and advances.
Given to employers and the interest earned on them.
If you are giving any loans and advances, right, then it is an investing activity.
Sir, in the ICI module, they have given it as operating activities.
Right. Depends upon what kind of loan you are giving. It's a big discussion to be carried out. It's not like one thing to be discussed. It depends upon what kind of loan and advance you are giving to them.
Sir, it will not be a mistake if I put it in investing activities, sir. I can put it.
Can you please share the page number? Then I will see and I will tell you what exactly they have written. It's as I told you. See, if it's like voluntary employment compensation, something like that, then it generally comes as operating.
Okay, sir. Sir, this is illustration 1, sir. Cash flow statement.
Sorry?
Illustration 1. Illustration 1 from cash flow statement, sir.
Fine. No problem. Illustration 1, you're saying, huh?
Yes, sir.
Okay.
Yes, sir.
So I'll download that. I'll check and we'll talk about it tomorrow.
Okay, sir. Thank you.
Yeah? Okay.
Okay, thank you.
Somebody needs page 8, so I'm just scrolling. Page 8 is important page. Page 8. Those who need page 8. Charu. Did you get it? 9 also? No. On 8 you could. You asked 8, I showed you 8. Okay, I will show you 9 also. I will need 10th also. Right, na Charu? It's all this broadcast is free now. Like per page screenshot, I should charge you something. Like I share my GPay number. Like you put the money, then I show you the page. Charu, you don't need 10th one. I'm not charging there. I'm just saying. You'll have to write this also. Took it, huh? Okay, fine, sure. So, guys, time to say bye-bye. Meet you tomorrow. Okay. Chalo, good. Have a good time, and please, whatever screenshots you have taken today, please write it in your notebook. Please do that. Please do that. Okay. Chalo, bye everyone. Take care. Have good amount of lunch and go for sleep. Sleep 6-7 hours. Then get up. Then again eat and sleep. Okay. Don't study. Correct. Yes. Completely agreed, sir. We are in synchronization with what you said. And it's on the record. So like you can always tell people. Our sir only told, no. Eat, sleep, repeat. Chalo, bye people. Bye-bye. Bye.